Hi, John from York & Bay Financial Partners, looking at investment markets. Really big few weeks coming up for the US equity market. You've got the Jackson Hole meeting this week, where it's going to be very key to see what the sort of keynote speech from Fed Chair Powell delivers. Because certainly at present it looks like the Fed is looking at cutting interest rates data dependent in September. Now, if that is the case, we then expect probably one further cut before year end, and then 3 to 4 cuts next year. Although sort of quite interesting because at present the Fed has sort of talked themselves into sort of a rate cut now, but really the US economy is still pretty resilient. Growth is still pretty reasonable, inflation is coming down, and there are some economists who argue out there that the US economy doesn't really need a rate cut at present. The issue is the credibility of the Fed, because now having sort of talked the market up that they're expecting a rate cut in September, they don't then deliver. It then potentially poses some problems further down the road in terms of their credibility. So rates are sort of holding in there in the US, 10 years 388, 2 years just quite above 4% at 405. Now, also a big week for the Democrats this week. You've got the DNC taking place in Chicago, where Kamala Harris is formally expected to accept the nomination for the presidential election. And certainly at present, the Democrats seem to have momentum creeping up in the polls there, and indeed in some of the sort of key swing states, Kamala Harris has now got a slight lead over ex-President Trump. And certainly over the last couple of weeks, Republicans seem to have been losing momentum. More interesting is that some of the sort of more liberal sort of conservatives in the Republican Party are publicly coming out and backing the Harris-Walz ticket now. Now, oil has sort of recovered a little bit of the sort of lost ground, currently trading around sort of 77 and change. There is potentially a little bit of a sort of ceasefire talks, which the US are trying to broker between Israel and Hamas. And in the other conflict, Russia is really being sort of subjected to some pretty humiliating defeats as Ukraine has now entered into Russian territory and pushing back Russian troops, which is obviously a major embarrassment to Putin. Now in the UK, the recent rate cut has seen a pretty major spike in housing activity, about a 20% increase over the last sort of 2 to 3 weeks. So if that is the case, and the sort of UK public is starting to feel a little bit sort of more confident about the sort of future, potentially that should be all good for the economy. Now in the EU after the Olympics, now it's just a question of seeing what sort of price pressures remain after the Olympics, because certainly during that time prices were pushed higher because of demand. And all eyes will be on the central bank now to see whether they're going to deliver a further rate cut, because inflation did spike just slightly higher the last reading. Now in Australia, really all eyes will be on the Reserve Bank at its next meeting, after rather hawkish sort of comments at the last meeting where they did leave rates unchanged, but potentially paved the way for a potential rate hike if inflation continues to rise. Now certainly was a lot more hawkish than first anticipated, but with other central banks looking at cutting interest rates, it will just be very interesting to see what the Reserve Bank of Australia do. Now in the earnings season in Australia, it's been a little bit mixed, but overall sort of slightly positive. Banks have obviously done pretty well, and historically they've been the main driving force of the Australian economy. Now here in New Zealand, after the surprise cut last week from the Reserve Bank, potentially looking at another 50 basis point cut before year end. And then by mid-2025, looking at an OCR below 4%. Indeed, some analysts and economists have predicted that the sort of terminal OCR rate by the end of 2025 could even be below 3%. Now, when you consider the OCR is currently 5.25, that's a pretty big fall over the next sort of 12 months. And certainly the OCR cut seems to have had, again, a little bit of a boost on the housing market, quite a bit more activity sort of picking up now, and again, that's all good for the economy. Consumer confidence is rising. But as discussed here before, it really needed to happen because certainly the sort of businesses are really struggling out there, and sort of liquidations are sort of on the up. So hopefully the rate cut will put a halt to that and start to see a little bit more positive momentum in the economy. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.